Hello guys, in this video I'll be showing you exactly how I am able to make this trade entry and the simple procedure I follow in order to make this trade entry. Remember, price is in an uptrend. This is my higher low, this is my higher high. Now I have a higher low and I have a new higher high. So obviously I have done that and I have my new range. So if you look at this, there is a liquidity that was sitting here. This liquidity that was sitting here, there was a liquidity grab by this candle. This bearish candle you are seeing took away liquidity. And at the same time, there is a liquidity sitting at the upper side. There is a liquidity that is sitting there. So here, a liquidity is sitting at this zone. And as you can see, this price took away that liquidity. So we have an institutional candle at this point. So this is our what? This is our institutional candle. Now that we've identified our institutional candle, what do we need to do? We're patient enough, price return into this zone. So when price came in, let's look at our 15-minute time frame and see exactly what happened. Okay, so price does what? Price came into that zone. So you can see that this is the return of price all the way into that zone. So even on our 15-minute time frame, you can see that there is a liquidity that was sitting here. Do you see that? There is a liquidity here that was taken by this candle. So look at what happened. So when price returned, if I were to be here earlier, when I got these two candlestick formation, these two pin bar, that is when I would have bought. My buy trade would have been here. Look at my stop loss, very small. And you can see how the trade is playing out. But since I missed this on the 15-minute time frame, I just saw it on my 1 hour time frame and I decided to go in. But if I were you now, what I would do, I'll be patient enough to wait for this 1 hour candle to close before I will make my trading decision. This is very, very simple. We have liquidity sitting here. This is a static internal liquidity. So this liquidity was taken by this price, and then we'll have that institutional candle, price return, to mitigate this institutional candle. So that is how the strategy works. It is very simple and it's easy. In the subsequent video, I'll be talking about mitigation theory, and you can take advantage of this, right? Of this simple trading strategy. And if you look carefully, you realize that this is a pattern. If you are a price action trader, you will know this pattern that just formed here. So what is the name of this pattern? If I may ask you as a price action trader. So this is a typical what? This is a typical bullish flag pattern. So you see that price retest the pattern. So price break out of it. We can consider this as the retest of the pattern, and then price is pushing to the upside. Is that not simple? Yeah, it is. And this is what we do. Thank you for watching. If you are yet to subscribe to this channel, please kindly click on the subscribe button. Turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.